Have you noticed how the world feels increasingly chaotic, polarized, and uncertain? Well, that's no accident. According to some historians, we've entered what's known as a fourth turning, a period of major crisis that threatens to reshape society, the economy, and even the global order. So, in today's video, we'll explain exactly what this fourth turning is, why it appears to be happening now, and how it could impact markets, your investments, and especially crypto. My name is Guy, and believe me, this is a video you can't afford to miss. Now, before we dive deep into the fourth turning, let's first get clear on exactly what it is and where it came from. So, back in 1997, two authors and historians, Neil Howe and William Strauss, published a groundbreaking book titled The Fourth Turning: An American Prophecy. In it, they proposed a startling idea, that history moves in predictable cycles lasting roughly 80 to 100 years, about the span of a human lifetime. Each of these cycles is divided into 4 distinct phases, or turnings, with each phase lasting roughly 2 decades. Now, according to Strauss and Howe, these generational cycles have played out repeatedly throughout history, shaping society, culture, and politics along the way. Each turning is defined by a prevailing mood and specific types of events, much like seasons in a year. First comes the high, a period of strong institutions, collective confidence, and social cohesion. Imagine the prosperous years following World War II, with booming economies, stable family units, and rising living standards. Next comes the awakening, when younger generations begin questioning established norms and pushing for personal freedom and cultural change. Think of the energetic but chaotic vibes of the 1960s and 70s, when people challenged authority, experimented with new lifestyles, and fought for social change. Following that comes the unraveling, marked by growing individualism, weakening institutions, and a breakdown in consensus. This is similar to the culture wars, political division, and economic instability we've seen since the 1980s, a period where society gradually splinters into competing factions. And finally, we reach the fourth turning, a time of deep crisis when old systems collapse, forcing societies to fundamentally reorganize. History shows these periods often involve severe challenges like wars, revolutions, economic crashes, or widespread social unrest. Now, according to Howe, we're actually living through a fourth turning right now. In fact, he predicted decades ago that we'd start entering this turbulent period sometime between the mid-2000s and early 2020s. What makes a fourth turning so significant, though, is not just the turmoil itself, but the way it fundamentally reshapes our society and economy. It's a bit like a forest fire. Devastating, yes, but necessary for new growth. Old systems break down, debts are reset, and new institutions rise from the ashes. Consider World War II as an example. It wasn't just a devastating conflict, it completely reshaped the global order. Post-war institutions like the UN and NATO and the Bretton Woods Agreement radically altered the geopolitical landscape and financial systems. Similarly, after the Civil War, the United States underwent profound social and economic transformations that paved the way for its industrial rise. And today, we're seeing the signs of a similar seismic shift. The economic models that dominated the past few decades, characterized by globalization, easy credit, and free-flowing capital, are coming apart. Policymakers are grappling with massive imbalances and debts and experimenting with unprecedented fiscal policies as a result. So, whether we like it or not, it seems that the fourth turning is upon us. But this raises a critical question. Why is the fourth turning happening right now, and what's driving this massive societal shift? And by the way, if you're enjoying this video so far, then be sure to smash that like button to help give it a boost. And if you haven't already, subscribe to the channel and ping that notification bell so you won't miss our next upload. Now, as we covered earlier, fourth turnings don't just randomly pop up. They're triggered by deep-rooted imbalances that build up over preceding decades. And when these pressures finally reach a breaking point, the established order begins to crumble. But why now specifically? The first major factor is the decades-long build-up of economic imbalance. After World War II, the world experienced unprecedented prosperity, initially driven by reconstruction efforts, expanding trade, and booming consumer markets, and later accelerated by globalization from the 1980s onwards. However, the true explosion of debt accumulation and historically low interest rates really began following the 2008 global financial crisis. Governments, corporations, and individuals took advantage of this ultra-cheap debt to borrow enormous amounts of money, fueling economic growth and sending asset prices soaring. While this system delivered prosperity, to some at any rate, its foundations were always fragile. The reliance on ever-increasing debt, artificially low interest rates, and continuous credit expansion simply isn't sustainable forever. And today, global debt stands at levels never seen before, pushing countries and economies to their limits. This debt-fueled model showed cracks during the 2008 financial crisis and again after the pandemic, forcing governments and central banks to intervene by easing policy, essentially kicking the can down the road. Then we have the political and social fragmentation that's been steadily growing for decades. Trust in governments, financial institutions, and the media has continuously deteriorated, and wealth inequality has only increased, with a shrinking percentage of elites accumulating more and more of the world's wealth. This divide could widen even further, with AI stepping in to snatch up the jobs currently held by everyday plebs like you and me. And interestingly, many elites are proposing universal basic income as a potential solution, one that might boost their wealth even more, a topic which we covered in depth right over here. Now, such a growing gap has fueled polarization and populism around the globe, evidenced by the rise of anti-establishment leaders across the political spectrum, from Trump in the US to Meloni in Italy, Milei in Argentina, and far-right movements worldwide. People are increasingly demanding real change, not just empty promises from one election to the next. Meanwhile, another important element is the gradual geopolitical shift sparked by China's rise over the past several decades. Following the end of the Cold War, the US initially enjoyed unmatched global dominance economically and militarily. But China's steady ascension since the 1990s has increasingly challenged American dominance. This slow-burning rivalry has intensified competition over trade, technology, and military power, creating geopolitical tensions closely resembling those seen during previous fourth turnings. Historically, the rise of a competing superpower always disrupts the existing global order and fosters instability. And finally, there's demographics. The generation who truly understood the devastating lessons of the last fourth turning, those who experienced World War II firsthand, have largely passed away. With them, society has lost invaluable wisdom gained through extreme hardship and sacrifice. In their place, new generations are stepping into leadership roles. However, unlike previous generations who lived through World War II and the Great Depression, these new generations have never experienced an existential crisis of similar magnitude. Without first-hand knowledge of how devastating such crises can be, they may be more inclined to challenge or dismantle institutions, potentially underestimating the severe consequences this could have. So, taken together then, these deeply rooted economic imbalances, steadily growing political and social fragmentation, rising geopolitical tensions with China, and a pivotal generational transition have created the conditions for a perfect storm. These are not random events, but the culmination of decades of trends and pressures that are slowly reaching breaking point. Which leads us to the pressing question: just how severe could this fourth turning become? Well, to answer this, we need to look back in time. As the old saying goes, history doesn't repeat, but it often rhymes. So, what can history teach us about what lies ahead? According to Strauss and Howe, fourth turnings bring profound crises that reshape society from the ground up, economically, politically, and socially. Previous fourth turnings include the American Revolution, the US Civil War, and the Great Depression that eventually led to World War II. Each of these crises severely disrupted existing institutions and forced societies to undergo fundamental transformations. Today, Neil Howe believes we're heading into similarly turbulent waters. Let's first consider the economic consequences of the accumulated global debt that we've discussed earlier. When debts reach unsustainable levels, governments have three main ways to respond: cutting spending substantially, defaulting outright, or inflating away the debts. Inflation, historically, has been the preferred political path because it quietly reduces debt without overtly slashing services or increasing taxes. But while inflation benefits governments, it devastates ordinary citizens by eroding their savings and purchasing power. We got a glimpse of this reality during the pandemic, when governments worldwide resorted to printing their way out of trouble, causing the prices of everyday essentials to surge. This approach benefited the wealthy who owned assets, widening societal divides even further in the process. If inflation escalates beyond control, however, governments typically double down by imposing heavy-handed measures like financial repression, where investors and citizens are forced to hold government debt or currency despite their rapidly diminishing values. And beyond the economic implications, the geopolitical landscape today also poses an alarming risk, especially the tensions between the US and China. A single geopolitical misstep, say in the Taiwan Strait, could quickly escalate into conflict between these two superpowers. And it's a lot more likely to happen than many people realize, possibly as soon as 2027, as we explored in our recent video about China potentially invading Taiwan, which you can find right over here. Now, if such an event occurs, there's a significant chance that the US could become directly involved. Just imagine the aftermath: global supply chains breaking down, commodity prices soaring, and widespread panic gripping financial markets worldwide. This would significantly alter the international order, forcing nations to choose sides. And we can already see early signs of this polarization, particularly between Western nations and the BRICS countries. At home, meanwhile, the internal divisions we've seen building up over decades could ignite political and social instability. Fourth turnings historically fracture societies deeply along ideological lines, causing governance dysfunction and increased risk of internal unrest. However, history also provides a silver lining to this very dark cloud. While fourth turnings are undoubtedly challenging, they also foster unity through shared struggle. People come together in times of great adversity, rediscovering a collective sense of purpose. But reaching this stage often means accepting stronger governmental controls, temporary sacrifices of personal liberties, and significant economic pain. Now, given all this potential turmoil ahead, how exactly could markets and crypto fare during this fourth turning? Well, as you might have guessed, given the economic and geopolitical instability we've discussed, it's probably no surprise that markets could become highly volatile and unpredictable as this fourth turning unfolds. According to renowned financial historian Russell Napier, we're likely entering a prolonged era of financial repression, elevated inflation, and tight capital controls. In fact, there's a classic saying in investing circles: economic expansions don't simply die of old age, they're murdered. And today, there seems to be no shortage of such potential catalysts, from intensifying global trade wars to China's increasingly aggressive posture towards Taiwan. Now, this doesn't mean you should panic sell your portfolio and brace for the apocalypse. But given that we're heading deeper into this fourth turning, a cautious and informed approach is essential. That being said, however, as we highlighted in our 2025 predictions video, there's still a chance this crypto bullrun could continue throughout the rest of the year. Yet understanding the deeper forces at play is crucial because it will determine how severe and lengthy the next bear market could become. So, consider the following potential scenario. If inflation continues to cool, as it has in recent months, even amidst tariff pressures, and the economy slows but avoids a full-blown recession, it could create the perfect conditions for stocks and crypto to rally. This might be fueled by some form of easing, not necessarily from the Federal Reserve directly, but perhaps from institutions like the Treasury through bond buybacks, which effectively serve as a form of quantitative easing. But such positive sentiment could rapidly unravel if inflation resurfaces due to ongoing trade disruptions. Under those conditions, the Fed would be forced into aggressive tightening, potentially triggering a sharp market downturn and driving the economy into recession. At that point, the Fed would find itself stuck between a rock and a hard place. If they fire up those money printers again to save the economy from a painful recession, they risk reigniting dangerously high inflation. On the other hand, though, cutting interest rates to boost growth isn't an easy option either, since they would still have to fight inflation. Economic turmoil of this magnitude could further inflame the geopolitical tensions we've previously mentioned, marking a significant low for markets and perhaps the darkest phase of the fourth turning. If that scenario unfolds, stocks and crypto could fall far lower than many investors expect. Napier also suggests that we're transitioning into an environment where highly speculative and hyper-financialized assets could lose favor. The era of easy money and ultra-low interest rates that boosted speculative markets is ending. And this means that the crypto and economic cycles we're currently living in may be the last of their kind, at least for the foreseeable future. Towards the end of this decade, companies and cryptos that survive and thrive will be those delivering genuine real-world adoption and sustainable revenue. In crypto's case specifically, we may end up with significantly fewer projects than we have today. The winners will be those with solid fundamentals, proven utility, and healthy financial runway. The entire crypto space could shift dramatically, focusing less on speculation and more on quality, real-world protocols. As financial conditions tighten and capital flows become less speculative, only the strongest will survive. Now, as you've probably noticed, there are many unknowns here. Exactly how all this unfolds, how long it could last, and what additional implications could arise is anyone's guess. But if history is any guide, we're likely entering the dark period before we get to the brighter era of peace and prosperity that follows fourth turnings. But how exactly should you invest your hard-earned money to not only survive but thrive during this monumental shift? Well, one thing that's clear by now is that the usual investment playbook won't always cut it. We saw this clearly in the 2022 market downturn, where traditionally safe assets like bonds, which were supposed to shield investors during tough times, took heavy hits alongside equities. In this emerging fourth turning, characterized by high inflation, capital controls, financial repression, and geopolitical uncertainty, a fundamentally different strategy is needed. Fortunately, we have valuable insights from experts like Russell Napier and Neil Howe to guide us through. So let's break down exactly how you can prepare asset class by asset class. So first off, bonds. Now, historically, bonds have been a go-to safe haven, offering steady returns and security. But in this environment, bonds could become a risky bet. As we've covered earlier, global debt has surged to unprecedented levels, and governments typically choose to quietly inflate away this debt rather than make unpopular spending cuts or tax hikes. As inflation takes hold, bondholders will demand higher yields in order to compensate. This causes bond prices to fall, leaving existing bonds with deteriorating value. Simply put, holding traditional government or corporate bonds during this fourth turning could prove dangerous for your portfolio. Secondly, equities. Over the past decade, growth-focused tech stocks driven by cheap capital and globalization have produced outsized returns. But now, this narrative could flip entirely. The new economic landscape favors tangible sectors like infrastructure, defense, commodities, manufacturing, and energy. We could see governments worldwide ramping up their spending in these areas to rebuild economies, restore supply chains, and boost national security. So, shifting your focus towards these sectors could position your portfolio to weather and potentially thrive amid this upheaval. Third, commodities. When inflation and currency devaluation strike, precious metals like gold and silver historically perform well. Gold especially stands out, not only as an inflation hedge, but potentially as a new reserve asset if confidence in traditional currencies deteriorates. This might also explain why gold has enjoyed such a sustained rally in recent years, a topic we recently covered right over here. Besides precious metals, other commodities like oil, copper, uranium, and agricultural products could also perform strongly, given their essential roles in economic activity and national security. But you'll have to research which ones they could be in your own time. Fourth, cryptocurrencies. As we've covered before, it's likely that many cryptos simply won't survive the upcoming bear market, especially in an environment defined by higher interest rates and tighter access to credit. So, how do you identify the potential survivors? Well, beyond established heavyweights like Bitcoin and Ethereum, the key is to look for cryptocurrencies gaining genuine real-world adoption. These will likely carve out their own specific niches, be it in payments, gaming, decentralized infrastructure, or otherwise. Remember, however, most cryptos will likely see a decline from their bull market highs once the bear market sets in. However, the ones with actual adoption and genuine utility stand the best chance of emerging back once the next bull market inevitably comes around. And finally, we have to consider geographic diversification and mindset shift. In an era of potential capital controls, geographic diversification becomes critical. You'll want to hold assets in jurisdictions less likely to impose strict controls or financial repression. Now, exactly where you diversify depends on your own research and circumstances, but the core principle is clear: don't put all your eggs in one basket. Additionally, it's essential to shift your investing mindset away from simply chasing returns towards preserving your existing wealth. In challenging times, the investors who succeed aren't necessarily those making the biggest gains. They're those who manage to limit losses most effectively. With all that said, however, there's no denying the period ahead could be significantly challenging. But armed with a clear understanding of what's potentially coming, you're now better equipped to navigate these uncertain times. And rest assured, we'll be here every step of the way to keep you informed as this fourth turning unfolds. Okay, that's all for today's video, folks. But if you're keen to dive deeper into Russell Napier's predictions and learn exactly what he sees coming, then you can check out our dedicated video on him right over here. Okay, thank you all so much for watching, and I'll see you again very soon. This is Guy, over and out.